What'd you miss? Time now for our weekly segment, Charts Go, with Abigail Doolittle, where we bring in the street's top technicians to look at in-depth charts and Bloomberg functions. Abigail.
Thanks, Scarlett. And joining me today is Frank Cappelleri, market technician at Instinet, also the executive director over there at Instinet. Frank, thanks so much for taking the time. And the theme this year, after last year's slow grind, higher volatility, a return of volatility, talk to us about what you think is next.
Well, as the saying goes, volatility begets volatility. And I would agree with that, even though it's cliche, and here's why. There it is. So this is a long-term chart of the S&P 500 going way back, and also on here is the plus or minus moves of 1% on a rolling 12-month basis. So we came into this year very low, as we know, at 8, and that was the lowest mark since 1966, all the way back here. And so we knew that couldn't continue, and so over the last 3 months, the number has jumped to 35. That's still relatively low, so I think that has to go higher. One reason is that the average has been 55 over that time. And we can see that in previous lows here, and you can go all the way back. When things changed, they spiked. So I think regardless if we're higher or low for the year, I expect more of the violent moves. So
most people think that volatility is always to the downside, but can also be to the upside. Do you think that we're going to see a new lower low or a new all-time high first?
I'm so bullish long term. One reason is that last year, 2017, was often compared to 1995. So when that low volatility period ended, the uptrend did not. And so we can see that here, as things started to move up, the uptrend continued, obviously, for a number of years. Not sure if it's going to be that strong, but I'm still bullish long term.
Okay, so one concern that I have, at least for the markets, is the sector composition. 6 of the S&P 500 sectors are lower on the year, and the utility sector, it has been in a correction, just out of it right now. And you have a chart here of the utilities and the 10-year yield. What do you take out of this chart?
Right, so as we all know, utilities and bond yields rarely move together for a long term. The thing about this, which is interesting, is that utilities, the XLU ETF, continues to be in an uptrend, right, from 2009, along with the other sector ETFs. Now, along the way, we've seen some pullbacks. Now, when demand came into that, it coincided with peaks in the 10-year yield. So that's why we're at a critical spot right now. XLU is testing that same line right there as the 10-year yield hovers around 280, 290.
That's
needless to say, if we have a bounce of utilities, we're probably not going to have the same thing for the 10-year yield.
Yeah, and yet it seems to be breaking out. Well, speaking of the 10-year yield, the rising yield should help regional banks, and yet we have sort of a sketchy pattern here for the regional banking ETF. Quickly, right. What do you make of this?
So carry ETF, regional banks are very sensitive to interest rates. So over the last few days, regional banks have reported, and they haven't been that good, and the stocks have resulted in that. So all of a sudden, now we have this potential topping pattern, as we see. Very classic head and shoulders with a very clear support line. So if this breaks to the downside, I don't have to explain what could possibly happen. Financials could get affected, and obviously the S&P as well. So, if you're bullish on interest rates, you want that to hold.